Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event.
Hello, everyone. Thanks for joining us today or watching this on demand. And I'm Zach from the Earmark team. I'd like to welcome you to Mastering FASB's Fair Value Rules for Digital Assets, Insider Insights. And I'm going to hand it off to your instructor for today, Kendale King. Kendale, thank you for doing this.
No problem. Thank you. Okay, so this is like my first time using StreamYard. So if you are in here live, that's what Zach is for, to to help me with that. But thank you for attending. I appreciate it, and I appreciate Earmark for even asking me to come on and do this. And I think this is very relevant information. So looking forward to a great session. All right. So first off, again, what we'll be talking about today, like he mentioned, is the new fair value rule issued by the FASB about regarding crypto assets, and talking a little bit about like my part, the part that I played in it, and then just understanding the rule and understanding how you can utilize this in your business. So going forward. So just wanted to go really high level about what we will be going over to get today. Again, is we're going to be understanding the key elements of ASU 2023-08. So if you are familiar with the FASB and you are familiar with accounting codification, you know that they do accounting standards updates, ASU. And the one that we're discussing right now is the one surrounding crypto assets, digital assets, the fair value measurement of it. We are going to explore the ruling's development and learn practical methods for implementing the rule, identify common challenges and pitfalls, and then, just overall, just kind of keep up with the latest trends and developments in digital asset accounting, just do some commentary. Okay. All right, moving on. First is, who am I? Kendale King. I am a CPA, affectionately known as the money man. For my clients, I am the one that brings in the money, and watches it. I have over 12 years of experience in accounting, and I specialize in digital assets, entertainment, content creators, gamers, music, all that good stuff, the fun stuff that, in my opinion, that I, focus on. Additionally, I am also the founder of CPA Con. CPA Con, which we'll talk about a little bit later on this next, grouping, is again also affectionately known as the Accounting Olympics. But we'll talk about more when we get down there. I am an advocate for financial literacy. I really am trying to do my best in getting everybody to understand the positives in understanding finances, understanding accounting, and doing it through ways that are not the norm. Doing it through gamification, doing it through interactive engagement. That's the key for me. And again, making accounting fun. Super passionate about transforming the industry and, again, combining those aspects, the passions that I have of entertainment with, the accounting space. So CPA Con, it is the concept of bringing together the fun of a cool, engaging convention, that you might think of like a Comic-Con or a DreamCon in my experience, and bringing that over into, the accounting space, almost like the Super Bowl of accounting, the NBA All-Star Weekend of accounting, whatever you like to think of, that floats your boat. Basically we're coming together, we're with the top talent, top people in the industry to compete, to network, to figure out how to grow and move forward, as far as your firm or your career, and, stay on top of those industry developments, stay on top of what's trending, stay on top of what's coming next. And it is an event that is backed by Cal CPA. It is backed by, the California Board of Accountancy, and NABA and other companies, organizations around, accounting. And we're doing our very first one this December, out here in Los Angeles. If you're interested, please let me know. You can go to our website, thecpacon.com, and you can get more information. Check on my LinkedIn, either of that. But again, I'm just really excited to tell you about that because it's coming up. But that is a little bit about me and what I do. So let's get into it. What is ASU 2023-08? It introduces the new guidelines for accounting and disclosure for crypto assets. And again, it's very timely because the effective date to, where this comes into play is actually December 15th, 2024. So you have a few more months, if you have not already done so, to incorporate this into your finances, into your financials for your company or your clients. Excuse me. And early adoption is permitted. So some people have already started doing this. But it is important, again, and it's very timely that we understand what came about, like why is this here, what's going on, and everything. Obviously, crypto was a new industry that has, digital assets in general is a new industry. The blockchain, it's a new over the past few years, and has recently gotten a lot of attention, and it's, a lot of, it's in a startup phase as far as all the companies that came from it. And it's very, very prevalent within those fields, and finding accountants who are equipped to do the accounting for it is, very few and far in between, even with our current, talent pipeline situation. So here we're hoping to, again, just go a little bit into what, that ruling is. Okay. So first off, how did I get involved in this at all? Literally, that's me typing an email. I went online to FASB once I figured out that I'd heard that they were, coming up with some of the ruling for it. This was about 2022. I was already in the space, and I am, just very interested in wanting to be a part of, in my opinion, it was history in the making. And I really wanted to be a part of it. And so I literally went on FASB.org, searched up who was on the project, and I emailed each and every one of them and said, hey, I would love to be a part of this in any way that I can. I have experience in it. I have opinions. I have, some contacts, whatever you need. I'm here for it. And they actually got back to me. And so, lesson number one is shoot your shot. As I always say, is definitely make sure that if you want to be a part of something, you want to see something happen, is definitely put that first foot forward. And that's what I did. I literally, just emailed. It took a little while because they didn't really respond back, in the time that I was waiting. And I had to follow up a couple of times, I think. But I was eventually able to get in contact with the supervising one of the supervising people on the project, Nick. And yeah, we started that professional relationship. And one of the very first things that he told me was that the FASB loves to get in contact and talk with stakeholders in the space, and was, more than happy to include me in on the process. And so before we get too far into it, obviously you're going to start seeing in these next, few slides is we are kind of expecting some level of understanding of crypto with this with this PowerPoint. So I don't go into, I had a separate presentation where I really go into what is, crypto, what is the blockchain, and I'll do a very quick sum up of kind of what that is. But essentially, blockchain is a distributed ledger that allows for, people to interact with one another across borders, and it's displays a public ledger chain that people can view at any time via explorers. But essentially it is new technology that really is transforming the financial space specifically. So we'll focus on that. They're transforming a lot of other spaces as well, but let's focus on the financial and the accounting impact of it. And so it was being new and having some nuances. It was very important and pertinent for the FASB and for other accounting or bodies and regulatory organizations to make sure to have some type of say and some type of input into and provide guidance to the individuals and the professionals who were in the space. And so this was FASB's, very like kind of their first, real step into it. Okay. So with all that said, the very first thing that Nick and the FASB sent over to me was a scope test. So they were saying, hey, we are trying to figure out how much we're going to really take this project, for example. So in order to do that, because, with that being said, crypto and digital assets is huge, is a huge, industry with several different layers. And so obviously they couldn't tackle the full situation. So their hope was to attack something that most people, had a, situation with, which was the fair value situation, how to value these assets. And the first thing that they wanted to do was to understand which digital assets will even fall in scope of this particular project. So this is literally what they sent me. I just copied, literally just took a screenshot and sent it and brought it here. But essentially, we're looking for some opinions on if certain assets met these criteria. Does this criteria even make sense, to be the first scoping of it? So meeting the definition of an intangible asset was something that was imperative for them. It can't be something that is physical. Literally, they're saying it has to be an intangible asset. It must not meet the definition of a contract as defined in their master glossary. And then they also have to have these three characteristics, which was it resided on the blockchain, the item is secured through cryptography, and it must be fungible. So just off the already in question, and it kind of eliminated quite a few different things. And so where we are right now is like literally my first step was taking this information and just making sure, like with all good accountants and all good researchers do, is like, let me just make sure we all on the same page about what these definitions are. So that's what I did. I went through first and was like, okay, what is an intangible asset? What is a financial asset? What is a contract? Just make sure, and this is literally pulled from their master glossary. So we're going to go over that first. So I'm just taking you into my process of how I attacked it, when I was being asked the question when it was being developed. So an intangible asset, it is a definition from their master glossary is an asset, not including financial assets. That's why I needed to understand what a financial asset was, so it was like layered. But an asset, not including the financial asset, that lacks physical substance. Okay, cool. And not talking about goodwill. All right. So crypto lacks a physical substance. Solid. That makes sense to me. Financial asset, again, it's not included in the intangible asset definition, but it's a cash or evidence of an ownership in an entity or a contract that conveys to one entity a right to do either receive cash or another financial instrument from a second entity or exchange other financial instruments on potentially favorable terms with the second entity. So a lot of hoopla to say it is, something that could be cash, something that can be, again, physical like cash, or representative of some other type of asset. So this, when I first saw this, I was like, okay, well, stable coins in my mind, again, is an asset, crypto asset that represents a dollar for USDC, for US coin, or, whatever that stable coin is pegged to or tied to, it is representative of that asset. And so in my mind, I'm like, all right, well, they're saying that this ruling does not include, stable coins. So I'm like, okay, cool. And then the contract is an agreement between two or more parties that creates enforceable rights and obligations, which I know a lot of us, if we were in the space and know what NFTs are, a lot of that always was based on a smart contract, some type of agreement between two or more parties that, again, created some type of rights or obligation, from another. So again, at that point, I'm like, all right, so by these definitions, then NFT isn't being included in here. And so I literally had to take these, I'll just go back to this previous slide, but I had to take this understanding, and it's like, all right, how do I apply this to, the crypto assets? And they gave me a bunch of different crypto assets, and I literally had to say, all right, do you think that this is in scope? Do you think this is in scope? And I literally went down the list over and over, and I made a nice little chart and was like, all right, this is in scope because it satisfies this condition, and this condition, or this is not in scope. So we're going to move ahead a little bit to see. Here's all the types of things that were literally on the list. It's only half of the list that they have provided. Points to the people who are able to, name, what these are. But it's like, whose line is it anyway type of points. It doesn't really do anything for you. Sorry. But, these were the type of assets that had been listed out for us to, kind of go through and say, all right, which one of these relates and would fall under this guidance? So obviously, from looking at this, this is the USDC that I just mentioned that technically does not fall under this guidance. Bitcoin, meets those criteria. Okay, cool. Ethereum meets those criteria. So it's certain things that met the criteria, certain things that didn't. And that was that first initial pass of doing the scope test with the FASB. I submitted my answers and my opinion, and it was generally agreed on with everything. And we took it to the next step. So the next step was they really wanted to get stakeholder feedback. So me being in the space as I was able to bridge the gap to a couple of other folks. And due to my relationship with a company called CoinSolve, they are a crypto accounting consulting company that I have provided services to help with, provide my CPA level of knowledge. And they had tons of clients, where, we were able to connect the FASB with to ask the questions, get stakeholder feedback, the people who are going to actually be utilizing the ASUs and the updates that, they were coming out with. We wanted to get that actual feedback directly from them. And so that's what happened, setting up these meetings. We were able to talk to just at least these handful of people. And I do know that they also were talking to other companies as well through other means. But these are the conversations that I was a part of. And it was great because me being in the middle of having my in-depth understanding and knowledge on research and how codification is created and good accounting rules, while also being in the space and having firsthand knowledge there, I know the accounting, but I also know, the business and like understanding where one side wanted to give or pull a little bit more than the other side, and being able to translate, one side to the next. And so it was very interesting conversations that, obviously started with the fair value measurement, but then it grew even more outside of, just doing this alone, but also other significant issues that existed within the space that, people were looking for the FASB to provide some guidance on. So these were fun conversations. It was just interesting, I'll say the least. So when I said that, again, I do have this understanding of, the codification. So really quickly before we go into it, high level, the codification is broken up into these 14 different sections that literally goes over every piece of a particular point of guidance. The ASU doesn't necessarily hit every single one of them. They're only going to be talking about whatever is relevant. So in this case, we were talking about fair value measurement of crypto assets. So when we look at it, the only things that we're going to discuss today and by going into the ASU are the objectives of the ASU, the scope, the initial measurement, again, the whole thing that we're looking for, initial measurement, how to, satisfy the disclosure presentation requirements, and then the effective date as well. So moving into it, objective. So the objective was that the FASB issued this to improve the accounting and disclosure of crypto assets. Again, one of the biggest things that people had always mentioned and complained about was, how do I value my assets? Initially, the way that it was measured was via, rules that it was an intangible asset. So you would hold it at cost and you would impair down. And for example, if you bought Bitcoin at historical cost, let's say you bought Bitcoin that was worth about $10,000. Next month, it goes down to $8,000. You would have to write that down and hold that on your books at 8,000 now. But next month, and take that loss as well on your income statement. But next month, let's say that goes up to $12,000. Again, it being an intangible asset at that time, and the way that it was recorded, again, at historical cost, less any write downs, you don't write it back up. And that was a major issue for a lot of crypto providers, because the balance sheet doesn't properly reflect what the company had as value, and it made it seem like the company wasn't as didn't have a strong balance sheet, or they were taking losses, and that weren't really losses because they're still holding on to the asset, and there's a chance for it to move back up. Some other companies took advantage of this, and when they wanted to get a loss, and sold some Bitcoin, and we'll get into that, probably in a different one, to see how people used / and quote unquote abused, in the past. But the objective here was to get everybody on the same page, address the concerns about the impairment only model, like I just mentioned, which again, a lot of people thought was like, this doesn't, really connect and doesn't make sense with what we currently have. And, now we are focusing on how to, properly measure them. So again, back to the scope. So they definitely settled on that this guidance only applies to entities holding crypto assets that meet these criteria. So that they are intangible assets, like we mentioned, they reside on a blockchain or similar technology, they are secured by cryptography and are fungible tokens, and they are not issued by the reporting entity or its affiliates. Now, this one is important because all the other things we talked about, this last piece means that the company Ethereum, who creates the Ethereum token, they cannot measure the Ethereum that they issued to themselves at the value of what is out there on as part of fair value. Obviously, for very, very obvious reasons, that can be a problem when folks decide that hey, we want to pop up our balance sheet a little bit, and so let's issue ourselves some more tokens, or hey, we want to, bump up our income a little bit. Let's, issue ourselves some tokens, or let's try to inflate what the value is by maybe drumming up some hype, going on X or Twitter to really push it up like a lot of people do. And so what this particular criteria was meant to do was to prevent things like that. And while I agree that it should be separate, it created just another lane of just like, okay, well, thanks for the crypto, that, I don't own. But a lot of the companies, obviously, who created the crypto and created the, the initial, token and everything, and has the report, has their own token on their balance sheet or anything, where it's left like, okay, well, this doesn't really solve that problem for me. And so, that's something down the line. I remember even talking to Nick about it, as well. As like, I think that's a huge piece that is still missing as well. I mean, there's plenty of other concepts as well within the space, such as DeFi, as well, that, need to be considered and everything. But again, right now, we are just focusing on the crypto assets that are held by entities that are intangible assets that are on the blockchain or similar technology. They are secured by cryptography, they are fungible, and they are not issued by the reporting entity or its affiliates. Okay. Again, that's very important to make sure you understand. Moving to the next piece. All right. How is it now measured? The key change in the crypto assets is that they will be measured at fair value, which again aligns a lot more with what the space, saw, and what makes more sense with what's going on. Both the increases and decreases will be recognizing net income during each reporting period. And again, it moves away from the previous approach, which was just write down, just impair, but don't come back up. But it provides more relevant information to everybody, because now we can see the true value at this point in time of these assets on the balance sheet, and it's properly reflected in both the balance sheet and the income statement as well. So that's the big change. It's one of those changes that was like, oh yay, thank you for doing that, but yeah, we were already thinking that in the first place. So it was definitely like it was thank you that we're here now for sure, but it's more like a thank you for catching up. Now let's get to the next piece. But again, fair value measurement was something that was very necessary. It was very important that we move to this, space, and to doing it this way, because again, improper, accounting and having that space not being so determined, it left for a lot of people to just kind of make up what they wanted to do. And a lot of companies were doing that. And we had even came up with some of that stuff during our call that we had with the FASB and the other companies that, we were talking with. So that was it was a pretty interesting, conversation, because we were literally going back and forth about, I understand, we understand that's what you do, but, that's not GAAP, so I think that was, again, some very interesting conversations. So moving on, presentation and disclosure. So they must be presented as crypto assets separately from other intangible assets on the financial statements. And they must disclose, I'm just going to read it off, the name, cost basis, fair value, number of units for significant crypto holdings, and then provide roll forwards of crypto asset activities. So, additions, dispositions, gains, and losses. And then come up with an understanding of how they determine their cost basis. So I want to say that before this was even put out, there's a company that I used to work for, actually. It's called Propeller Industries. They came up with what is called the Statement of Digital Assets, SODA, which is kind of getting to this already, and listing it all out. So balance sheet, they would follow FASB and report stuff at impairment and impaired value, historical cost, all that good stuff. But then they would have a supplemental statement called the Statement of Digital Assets, where they kind of did this thing here where they presented it, in the roll forward manner of just like, here's what's going on. So you can have the actual, more relevant information. And so it looks like, again, FASB recognizes that that's something that is necessary, even with just putting it on the financial statements, but having the additional supplemental information within your notes or within your disclosures that is going to elevate what you're doing, and elevate the relevancy and elevate the understanding. Okay. And again, like I mentioned, the effective date is starting December 15th, 2024. So everybody's balance sheets at the end of this year needs to be reflective of fair value, and you need to have those additional statements included. And so it's very important that, again, you take the time to learn, to understand what needs to be done when it comes to that. And so with that being said, let's talk about some common pitfalls. I think the biggest one, again, that's why I spent a little bit of time on it, was to pause and really look at the incorrect scope identification, because there are a lot of tokens, a lot of technology out there that looks, smells, and feels like, the crypto that should fall under this, under this guidance, but it doesn't. And so again, going back, and sorry, I'm gonna take you all the way back to the page about my little kitty cat. This page here. So when you look at this, page here, you would think, all these are crypto. All these things should be measured at fair value, but it's not that simple. So when we go to the Bitcoin, again, Bitcoin doesn't actually have a company that, has, claimed it and is running it. So they really shouldn't have a problem with implementing the guidance here, because this should fall under, this guidance, no matter what the company is. So again, it is intangible asset. It is secured on the blockchain by cryptography. It's fungible. And it is, again, not a report. It's not taking credit for it, and there's no company behind it. Then when you look at XRP, that's a different story. Anybody else outside of XRP, outside of Ripple, who holds XRP, there underneath, under this guidance, but Ripple itself cannot measure its own token using this guidance. They cannot use fair value when moving forward. Then we have, again, our stable coins here, USDC and Tether. Those are stable coins. They represent an asset, or they represent something else, both of them being the US dollar. So it represents cash. It represents something else. And so therefore it does not fall under this guidance either. And honestly, technically, it should be one for one. It should really just be treated as cash, and the dollar. And obviously, there's some nuances there as well, but more times than not, it should just be valued as whatever it is representative of. Then you have, again, NFTs, which are literally are taken out of this guidance because they're non-fungible. And so literally are valued in a different way. My personal opinion depends on the, what the actual, contract says and everything, but more likely than not, it should be kind of viewed as some type of asset, some type of inventory in certain cases, or intangible asset, that is marked down. But I have my own philosophies on, finding out what's the best way to value that. And I think there's a lot of people out there who would, say that there is no value in an NFT. And so that's another argument for another day. So again, Solana being the same case where they created their own token, but they are also a company, so they can't measure Solana on their books using this guidance. But if Solana held Bitcoin, they would be able, that would fall under this guidance to use fair market value as far as to recognize how much the measurement should be. Okay, so again, I think that's a big one as far as a common pitfall that I think many people will see going forward, is just getting that correct. Then you move on to improper fair value measurement. How are you actually measuring fair value? I think you would have run into this issue with any type of asset that you have to fair market value, and excuse me. So how are you going about taking the steps to make sure that this is value added at a rate that makes sense? It is public. It is truly what the fair market value is, not something you just want it to be. And so I think this is, again, a common pitfall just in general. Not even, you can even take away crypto. You can just look at just the real world and how things happen. Improper fair value measurement is very prevalent. And then we move into inadequate disclosure and presentation. There's a lot of information that is needed and necessary in order to disclose this properly. So that means, again, you got to get the additions, the dispositions, the gains and losses. And while that might sound very easy, if you don't have the right tools together to, capture all that information, or if you're engaging in complex transactions or like DeFi, or trading out from one token to another token and stuff like that, it can get very difficult on making sure that you're presenting and disclosing this information in accordance with this codification. So that is a very important thing to make sure that you are on top of. Another pitfall that I haven't put on here, but I would be remiss to say, is just not having the proper controls in place. I think that specifically a lot of the crypto companies, that have come up, a lot of them are startups, when you think about it, right? A lot of them started, within the last 5 years and are still building up. And it's a different scenario, because a lot of these companies have been getting millions and billions of dollars, or billions valuation, I should say. And they are usually started from a few people who, again, aren't really taking their accounting seriously. They're only doing what they need to do to file their taxes, and even that barely. They're trying to hide all of their gains and losses, as all their transactions as it relates to crypto. Many people don't think that it was even taxable at one point, which was all just information that was incorrect. And with that, I see a lot of companies, a lot of clients that I've dealt with, who are always in need of going back 2, 3, 4 years into the past to update their financials, because they just didn't do it in the past. It was like, well, nobody asked and nobody's saying nothing. So, and all I needed to do was just present something to my investors, and they just made it work and made it happen. And then they get maybe a notice, a slap on the door, it's like, hey, IRS is looking at this, or maybe they need to get, a loan, or, do something where they do need that sign off. They do need a CPA or an accounting firm to say that these books are prepared in accordance with GAAP. And then they take that step. Like, all right, hey, I need y'all. But any competent CPA is going to be like, well, I can't just do this year. I can't just take what you just give me this year. I need to understand the cost basis of this. So I need to go all the way in the past. And so if you haven't updated this properly, how do I know that, the amount on your books is what it should be, And so that's where a lot of the work comes in. And usually a lot of the pitfalls that I see is, because of that. So again, just wanted to make sure that, again, I didn't list it here, but proactively is key in order to be successful in this space. All right, so I told you the pitfalls, but like I mentioned about the internal controls, I'm going to give you some ways that I think that you can help, minimize and to implement these strategies. Number one, update accounting policies and procedures. I love coming together with a company and be like, hey, here's how you should do it. Here's how this thing works. I love having those conversations. Like, man, this is you really thought this out about how to use this crypto to, build an empire to you can make money here, make money there. But they had that all in their head, or maybe they created a white paper. But I'm like, all right, now it's my job as an accountant to take that and let me write you a revenue recognition memo. Let me write you an operational, delegation. Who's approving what. It's like a lot of this basic policies and procedures that exist in a lot of the other companies. And again, I have a Big Four background. Working, back at Deloitte in the while. It's like I'm used to seeing these things. I'm used to what a company that is being subject to audit, or a company that needs X, Y, and Z and needs a sign off. They have these policies and procedures already in place. And so a lot of these other companies, startup companies, the crypto companies, they don't have that. And that's usually the first place I try to start. It's like, well, I understand you need to get this out to your tax authorities. I get it. But in order to do my job the best way and we need to understand what costs you are incurring to generate those revenue streams. And then what costs are, just regular expenses. And again, to accountants, this is pretty easy. Of course, it's stuff you would do, but it is not second nature for a lot of people in the space. And there has been, I'm gonna say, probably not a single company that I've ever engaged with that has had any semblance to this. And so this, and again, just for people who having their own firms, or who are working with clients like this is a great way to even just provide a service to them. It's like, hey, let me get your revenue recognition memo together. Let me get your policies of how you are directing your financial department, or directing your full revenue cycle, your full AR AP cycle. Like, document that, putting the flow charts out. That's a huge step in just getting everything going on the right path going forward. So updating accounting policies and procedures is huge. Next is to train the accounting team or engage experts. Another thing that I've seen in this space is that not a lot of these companies have, number one, they don't even have an accountant, or they have an accountant, or maybe it's just a bookkeeper or a tax person who doesn't really understand GAAP, who doesn't really understand FASB. They're just doing what they need to do to get the taxes done. And again, for a time in the space, that was really all that was needed to be done. And a lot of time people just leaned on the fact that, oh, well, there's no real rules, they don't care, so why should we care, type of situation. And not saying that people don't have pride in their work. I think it's also just in the sense that, it's a lot of stuff coming, a lot of stuff, going, and, meeting the opportunities. But it is very important that your accounting team, if you are a company who owns a crypto, company, or engaging in crypto, that your accounting team has the appropriate training, or you just engage experts out there. There's a ton of, firms now. It wasn't, that many in the years before, but there's a ton of firms now who specialize in crypto, and who do these kind of things on a daily basis. It is important to, again, understand that there's a difference between doing it for tax purposes and doing it for accounting purposes. The IRS and the FASB are two separate entities and organizations that require different things. And so it is important that you have someone, if you're going to have one team or one person, that you have somebody who understands both of those, or that you have understands the accounting piece. Is very, very important. Lastly, I think one thing that honestly would just make a lot of people's lives easier is utilizing crypto software. So crypto accounting software, again, when I first started, was very few and far in between. It was very scarce as far as like the ability to do certain things in, and it was still growing. But again, that was like 2 3 years ago almost. And since then, a lot of the accounting software companies have done great in updating and get into a space that it really helps going forward. Because before this, I don't know how I tell you, I would have to go on to the block exchange, block explorers, or get reports from my clients and have to do the FIFO or the LIFO and figure out, sometimes the price wasn't there. So I had to go on to a pricing website like CoinGecko or CoinMarketCap or something like that, bring that information over, build everything into an Excel. And a lot of times, a lot of the customers that I had, they have lots of small transactions. And so you're dealing with an Excel file that is huge. It takes, 20 minutes to upload and update and to open. And so it gets very, very annoying and a lack of a better word, by, really dealing with that. And so having a crypto accounting software that, really works for, what your company is doing or what your client has is paramount, because it just can save you so much time. And when you're looking at figuring out what crypto accounting software you want to use, it is important to understand what blockchains they are utilized, like what blockchains they are, boasting that they can support. What type of transactions are they looking to be able to support? Do they support DeFi transactions, the complex stuff? Do they support NFTs? And if you're an NFT business or that you engage a lot with it, are they able to properly value those and transact in that? So those are very important things that you want to ask yourself of the crypto accounting software that you're going to be dealing with. Again, that is figuring out what fair value market strategy that they're using. Where are they pulling their prices from? And as an auditor, how understanding what prices they're pulling from and using something different. Again, there's a lot of different things to consider when you are working within crypto. But again, it would be huge to be able to have a crypto accounting software that you understand and that can give you everything that you need, because it will save you tons of time. Okay, so I think that is really it for me. I don't really see any questions or comments or anything. I'm not sure if I'm supposed to see that or not, but I'm assuming that we don't have any. If you do have any questions or comments, please let me know.
Hi, Kendale. Yeah, you're breaking up a little bit. I don't know.
And I can definitely answer them. So I'll wait, like, if we have any questions or not.
Kendale, you're breaking up, but I think that's a good time to end it. Thank you everyone for watching this. I don't think we have any live questions. If you have questions, Kendale gave his contact info, I'm pretty sure, right, Kendale? Do you want to give your...
Yes. So let me do that right now.
Yeah.
My contact information, if you want to reach me directly. Oh, wait, here's a comment. Something came in. Oh, they said no questions yet. Lots to absorb. Thanks, Kendale. Thank you, Paula, for that. But again, if you want to reach out to me, if you have any questions, you can immediately just find me on LinkedIn at Kendale King CPA. I also am reachable via my website, again, the cpacon.com. You can access there, or you can, honestly, LinkedIn is going to be your best bet. I'm on there all the time. So if you have a LinkedIn, find me on LinkedIn, connect with me. And we'll be looking to do more things like this going forward, where we're providing this information. And I really appreciate everybody who's attended live and who's going to watch this afterwards. And again, would love to see everybody at CPACon this December, December 3rd, here in Los Angeles. Thank you.
Great. And yeah, thanks again for everyone watching us live. And thank you, Kendale. Here's a quick reminder on how you could earn your CPE for attending today's webinar.
Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.